And it has concluded with the grand event that happens once every 4 years, the United States presidential election, and the winner is Donald Trump. This is the weekly update by FISG.com with me, Ton Kitty. Let's not beat around the bush and take a look at the asset price updates after the election has concluded. Of course, for gold, we see a key support level at 2,750 Troy per Troy ounce. Currently, the price has already come down to this level. Last week, we predicted that if the price went up, it could reach around $3,000, but if it retraced, it would likely come down to around 2,653. As of now, it is at this important short-term support level. If it cannot hold at this level, the price could drop to around $2,500 per Troy ounce, or more precisely, 2,496 per Troy ounce. Next, regarding the US dollar, it has surged strongly, with the US dollar price adjusting upwards to around. The US dollar is now at 104.105, with the upper resistance at 106. This is quite clear, as speculation and reactions to the election results have occurred. After this, the US dollar is expected to trend towards weakening, gradually diminishing due to the devaluation or depreciation of the US dollar. Next is the oil price. We still have a super bullish long-term outlook for oil prices. Let's see if the oil price can rebound. The key support level is around $66 to $67. The upper target will be between $100 to $120 per barrel. Next, what will happen is that the market will refocus on important economic data. The first figure we will encounter this week is the CPI, or the US Consumer Price Index. This figure is important because, as mentioned last week, the market will refocus on the issue of interest rate hikes or cuts in the US. The CPI will be one of the figures that will influence the Federal Reserve's decision on what monetary policy to implement, whether to maintain interest rates, cut them further, or unexpectedly raise them. The Federal Reserve's policy needs to reduce interest rates to combat inflation, aiming to bring inflation down to around 2%, which is the target of the Federal Reserve. Next, the second figure is Japan's GDP, which will be announced on November 14 this year. It is quite difficult to predict how it will turn out due to Japan's economy having been in a prolonged slowdown. Growth has not been very good, and when it contracts or slows down, it does so for a long time and deeply. The next figure is the GDP from the UK, which has recovered after COVID. There was a recovery in GDP figures, but this recovery has only reached a very basic level. Since then, it has weakened without any significant growth, and the growth rate is considered very low. Currently, it is still uncertain how growth will develop for the UK, which makes forecasting quite difficult. Meanwhile, the global economy is quite concerned about growth, and the UK has not shown any new curve that would allow GDP to surge into the double digits again. And this is the market update by FISG.com. I am Ton Kitty.